The Communist Party's twice-a-decade Congress determines political succession and sets the tone for China's policy direction for the next 5 years. This year's meeting is expected to cement President Xi Jinping's legacy in the country's history books.
The main change in the party constitution is we think, to have Xi Jinping thought added to the constitution. And this would elevate Xi to the same level as Mao Zedong, and the only other party leader to ever have that accolade, and really move him into almost an unassailable position.
Experts will also be watching closely for clues as to how China plans to tackle a host of challenges threatening its economic miracle. International organizations like the World Bank and the Asian Development Bank have downgraded their growth forecasts for China. China had set a target of 5.5%.
In the shorter run, we have seen that second quarter economy has come down very sharply to close to zero, which is quite unique. At the same time, China has get on the path to restructure its economy for long-term sustainability, structural change. So from the economic perspective, this is also very important to see whether we're going to see changing policy directions or new strategies coming up or new policies.
A key question is whether China will lift its COVID-0 policy after the political dust settles in October. Months of prolonged lockdowns have taken a toll on China's massive services sector, dragging down employment and consumer spending.
So after the Congress, that does make it easier on the political side. And I think we will start to see the propaganda and the state media messaging around zero COVID start to change and become a little bit softer. But the healthcare is the main barrier.
Another pain point is the troubled real estate sector that accounts for 70% of household wealth. Hit by bad loans and a liquidity crisis, home prices in China have declined for each of the past 12 months. Experts believe authorities will announce more stimulus to stem the slump.
The real estate sector, some would say, has been in a bubble territory for the past 10 years. In 2020, very draconian deleveraging policies for the real estate sector was implemented, the so-called 3 red lines. That curtailed property developers' ability to borrow even more money from the banks to finance the next project. Suddenly, the whole bubble began to deflate very rapidly. And real estate investment, is still down sort of 20-30% compared to last year. And that is a major headwind to the economy.
Beyond tackling short-term challenges, China's economy also faces structural issues, such as a rapidly aging population and a political push for dual circulation to cut dependence on overseas markets. All these are likely to give fresh incentive to push for the common prosperity policy, Xi Jinping's flagship drive for shared wealth.
Common prosperity is clearly very important and at the forefront of Xi's mind. Very simply, it is a focus on slower, more sustainable, more equitable growth with a much greater role for the state in the economy. But on the flip side, it will see more of this tech, the regulatory crackdown that we have seen in the past, where areas that are unaligned with the common prosperity agenda, like property sector, like big rent-seeking tech companies, will be hit very hard from the state.
For the Chinese leadership, I would say it's more about maintaining control of the economy of society while achieving these major milestones. Have the Chinese economy be bigger, have the Chinese military, be the most powerful. I personally think that the only way to achieve these milestones while not losing control over the economy and of society is to have the state take over larger and larger share of the economy.
All these challenges cast doubt on China's ability to hit its growth target this year.
It's quite sensible to say that the target is gone for this year. And if you look at the projections and outlook, and it has come down to, at best a 3 and sometimes below 3. So as long as people do not feel that their standard of living are considerably lowered and they see hope on the way, I think the economy can remain resilient, that the economy has enough size and diversity.
But don't forget, in the beginning of the year, actually, China has we call the double 5.5 targets. So the first 5.5 is for the growth. The second 5.5 actually is for the unemployment rate. They try to keep the unemployment rate below the 5.5%. Even though right now China has kind of de-emphasized the first 5.5, which is a GDP growth, but the second 5.5 is still very important. That's why I think what China will focus on in the next few months is really the job market.
Despite the knock to business confidence caused by the recent headwinds to the economy, experts say the potential for the Chinese market is still too big for international investors to ignore.
China still has one of the most complete value chain and supply chain globally. I think that's also, they can try to provide some kind of support to the foreign investors. So net, I would say China will still try to attract the foreign investors. But of course, from the foreign investment perspective, they will also assess not only from the economic angles, also from the politics angle, also from the geopolitics angle. So that's where the gap right now is. So I think hopefully we can see how China can work extra hard to close the gap, to reassure, China is still a nice destination for a lot of foreign investors.